Hi everyone. Welcome to Level Up Dividends channel. As John D. Rockefeller famously stated, the only thing that gives me pleasure is to see my dividend coming in. Dividends reveal a great deal about a company. Dividend growth reveals a lot about a firm and is one of the primary ways companies convey financial health and shareholder value. Dividends offer a clear and powerful statement about a company's maturity, profitability, and overall prospects. After all, organizations that can pay out earnings and raise the size of such payments over time typically have strong fundamentals. Dividend-paying companies are serious about recruiting and retaining investors by rewarding them with recurring payouts. In today's video, I present 14 stocks that have increased their dividends by double digits not simply for the last 5 years, but for the 20 last years. This is for me a very positive sign that shows that these companies are very serious in rewarding their shareholders. Now, let's get into it. Stock 1. Enbridge. Enbridge is North America's largest midstream energy firm, with roots dating back to a single Canadian pipeline in 1949. The company earns the majority of its income from its oil and gas pipelines, terminals, storage facilities, and processing units, which help connect the continent's most significant energy-producing regions. Enbridge's business is made up of regulated natural gas distribution utilities and renewable energy production assets. Dividend yield, 7.56%. Dividend safety, 70. Dividend growth, 12% per year in the last 20 years. Dividend growth streak, 70 years. According to analysts, the stock could reach $41, which represents an upside potential of 15%. Stock 2, Walgreens Boots Alliance. After combining with Alliance Boots, Europe's largest pharmacy chain and a major international beauty firm, the company moved on to open thousands of additional locations across America and expanded its business globally in 2014. Walgreens derives the majority of its income from pharmaceutical and general product retail sales in the United States, with lesser contributions from its overseas retail pharmacy operations and wholesale medications division. Dividend yield, 6.60%. Dividend safety, 70. Dividend growth, 14% per year in the last 20 years. Dividend growth streak, 91 years. According to analysts, the stock could reach $31, which represents an upside potential of 9%. Stock 3, Bank of Nova Scotia. Bank of Nova Scotia, founded in 1832 to supply money for commercial operations, is one of Canada's largest and most diverse banks, with over 30% of its revenue coming from outside North America. Scotiabank produces revenue from lending activities as well as fee-based sources such as credit card fees, mutual funds, wealth management, underwriting fees, and trading profits. Dividend yield, 6.54%. Dividend safety, 70. Dividend growth, 9% per year in the last 20 years. Technically, 9% is not a double-digit increase. However, I still find it important to mention Bank of Nova Scotia as it has honorable records. Dividend growth streak, 190 years. According to analysts, the stock could reach $52.80, which represents an upside potential of 10.8%. Stock 4, International Business Machines. IBM's engineering innovations transformed the corporation into a global powerhouse under Watson's leadership. The company progressed from selling simple scales and clocks to developing accounting and calculating equipment capable of printing alphabetic data and performing rudimentary arithmetic. This research laid the groundwork for IBM's major achievement in the 1950s, the mainframe computer. These refrigerator-sized devices do mission-critical tasks like handling an insurance company's databases or a bank's credit card operations. Dividend yield, 4.68%. Dividend safety, 65. Dividend growth, 13% per year in the last 20 years. Dividend growth streak, 28 years. According to analysts, the stock is hovering around its fair value. It's neither cheap nor expensive. Stock 5, TELUS. TELUS originated as a telephone service company run by the Canadian province of Alberta over a century ago. It wasn't until 1990 that the government privatized what is now one of Canada's leading telecommunications companies. While TELUS business is divided into wireless and landline segments, each serves a similar role in providing the critical service of digitally connecting individuals and organizations via its networks. Dividend yield, 6.19%. Dividend safety, 72. Dividend growth, 12% per year in the last 20 years. Dividend growth streak, 20 years. According to analysts, the stock could reach $21.80, which represents an upside potential of 24%. Stock 6, Toronto-Dominion Bank. The first forerunner of Toronto-Dominion Bank was created in 1855 by a group of millers and merchants to provide crucial financial services to Canada's burgeoning grain sector. TD is now one of the largest banks in North America. Unlike many other large banks, TD has less exposure to investment banking and trading operations, which are more cyclical and risky. Dividend yield, 4.42%. Dividend safety, 80. Dividend growth, 10% per year in the last 20 years. Dividend growth streak, 166 years. According to analysts, the stock could reach $68.50, which represents an upside potential of 7.4%. Our seventh stock is one of my favorite. It is Canadian Natural. Canadian Natural's operations began in the shallow gas basin of Alberta in 1973. Later, the company expanded its natural gas production to British Columbia and added crude oil assets across Western Canada through acquisitions. Canadian Natural is now Canada's top heavy crude oil producer and the country's largest independent natural gas producer. In contrast to its integrated peers, which run midstream and refined products businesses, the company derives almost all of its income from upstream activities. Dividend yield, 4.37%. Dividend safety, 70. The dividend growth of Canadian Natural has been a huge 22% per year in the last 20 years. Dividend growth streak, 21 years. According to analysts, the stock could reach $71.60, which represents an upside potential of 16%. I really love this stock. It combines an appealing dividend yield with an even more appealing dividend growth rate, and its upside potential is very interesting. Stock 8, Public Storage. Two California businessmen launched Public Storage in 1972, investing $50,000 in a single storage facility to create temporary income. With over 3,000 rental facilities, the company has subsequently grown to become one of the world's largest self-storage REITs. The storage business has been one of the fastest growing segments of the commercial real estate market since its start in the early 1970s. The unabated rise in storage demand has been driven by increased population density and an older population, but there is more to Public Storage's narrative. Dividend yield, 4.23%. Dividend safety, 96. Dividend growth, 8% per year in the last 20 years. Dividend growth streak, 42 years. According to analysts, the stock could reach $329, which represents an upside potential of 16%. Stock 9, Royal Bank of Canada. The Royal Bank of Canada, or RBC, began giving credit to merchants engaging in the busy trade out of Nova Scotia's waterfront in 1864. RBC is now one of the world's 10 largest banks. Personal and commercial banking, which includes home mortgages, checking and savings accounts, mutual funds, credit cards, vehicle finance, and personal and business loans, provides for almost half of the firm's revenue. Dividend yield, 4.21%. Dividend safety, 80. Dividend growth, 10% per year in the last 20 years. Dividend growth streak, 153 years. According to analysts, the stock could reach $103, which represents an upside potential of 10%. Stock 10, Franklin Resources. Franklin Resources, founded in 1947, is a global investment management firm dedicated to assisting individuals and organizations in achieving long-term financial objectives. Benjamin Franklin was chosen as the company's name because of his frugality and prudence when it came to saving and investing. The firm manages more than $1 trillion in assets for individuals and institutions in over 165 countries, with around 70% of assets managed related to clients in the United States. Dividend yield, 4.31%. Dividend safety, 70. Dividend growth, 13% per year in the last 20 years. Dividend growth streak, 42 years. The stock is not cheap right now. It has a P/E ratio slightly above its peers. I would wait for a market correction to consider buying Franklin Resources. Stock 11, Flour Foods. Flowers Foods was formed in 1919 by two brothers and sold over 500 bread loaves on the first day. With over 40 active bakeries, the company has grown to become one of the major producers of packaged baked foods in the United States. Flowers sales are dominated by fresh breads and rolls, with snack goods accounting for the majority of the remainder. Nature's Own, Wonder Bread, Dave's Killer Bread, Canyon Bakehouse, and Tastycake are some of the company's prominent brands. Dividend yield, 3.61%. Dividend safety, 62. Flour Foods has a whopping dividend growth rate of 28% per year in the last 20 years. Huge. Dividend growth streak, 20 years. According to analysts, the stock could reach $27, which represents an upside potential of 8%. Stock 12, PepsiCo. The first Pepsi drink was produced in 1898 by a North Carolina pharmacist inspired by the recent success of Coca-Cola. The drink quickly gained popularity, and the Pepsi-Cola Company was formed in 1902. Throughout the 20th century, the corporation invested heavily in marketing and acquisitions to build a portfolio of well-known beverage brands. Through a merger with Frito-Lay in 1965, the company moved into the snack market. PepsiCo is now a global leader in its categories, with approximately $70 billion in yearly revenue split nearly evenly between snacks and beverages. Dividend yield, 2.79%. Dividend safety, 93. Dividend growth, 11% per year in the last 20 years. Dividend growth streak, 58 years. According to analysts, the stock could reach $204, which represents an upside potential of 12.8%. The 13th stock of the list is one I like much, that is Archer Daniels. Archer Daniels Midland, or ADM, was created in 1902 by the founders of the firm, who built a crushing mill in Minnesota to offset dwindling linseed production in the eastern states. Over the next century and a half, ADM has grown to become one of the world's leading agricultural origination and processing firms, as well as a leader in human and animal nutrition. Dividend yield, 2.19%. Dividend safety, 94. The company has a dividend growth of 11% per year in the last 20 years. Dividend growth streak, 92 years. According to analysts, the stock could reach $98.80, which represents an interesting upside potential of 20%. Stock 14, Prudential Financial. The corporation primarily operates in the United States and Japan, with a minor but growing exposure to high-growth international markets. Prudential has been around for a long time, and its longevity can be traced in part to its conservative approach to business management. The A-rated company maintains a robust balance sheet and capital levels in its insurance business that are significantly higher than those required by regulators to ensure it remains solvent across industry cycles. Dividend yield, 2.19%. Dividend safety, 94. Dividend growth, 11% per year in the last 20 years. Dividend growth streak, 92 years. According to analysts, the stock could reach $97, which represents an upside potential of 4%. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.